Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, September the 13th, 2013. So, lucky Friday the 13th has passed, and we closed out the week pretty bullish in the stock index futures. So, let's get started with the Dow futures, and I've switched over to the continuous contract because we were trading the September contract. And we're now into the December contract. We rolled over on, I guess it was Thursday, September the 12th. We started to roll over, and the December contract started taking more volume. But what ends up happening is I lose all of my lines on the chart when we roll over because it's a different, for all intents and purposes, it's a different charting symbol. And I just, I think it makes more sense just to switch over to the continuous contract. So looking at this continuous contract, which essentially charts the same thing, but doesn't, require me to switch contracts, we have, let me just grab the pen here. We have an interesting situation where you've got this high in place. On the left side, you've got a high in the middle. And if you know where I'm going with this is starting to look a bit like a head and shoulders pattern. So if you look at where the right side of the left side of the pattern is, comes in right around 15,353. We're really close to that level there. And what I'm wondering is, are we going to do this sort of scenario, and are we going to roll back over and form, this sort of head and shoulders pattern? You've got momentum topping out on the slow stochastic right at the high, and you've got the MACD testing the zero line here. So I think this is a pretty likely scenario. But having said that, there's nothing to stop this market. So this would be one scenario. But having said that, there's nothing to stop this market from, just pushing right up and retesting the high. Okay, so I think both of those scenarios are potentially in effect. You have 15,353 up to 15,565. I'm not really looking for a lot of upside potential, on a test of these levels through there. I think you have to be really cautious here, recognizing that momentum is really overdone to the high side. So not a lot to talk about in this market. We have, we broke through this trend line. We held 14,800. We held the lows here, and we pushed right back up to the high side. And now that you're back up to the high side, you're really into this resistance zone. It's a 200 point, let's see here, 353 to 565. It's about a 230 point resistance zone in this area. So I'm not really expecting a heck of a lot out of this. Except for maybe a test of some of these higher levels. And then I'm not really looking for any, major move outside of this area at this point in time. I think you've got this resistance zone here, and you have to respect the fact that even though the market looks more bullish than bearish, you're right into resistance. So I hope that makes sense. Let's move on to some of the sister markets. Okay, so let's take a look at the S&P 500, the S&P futures. So you have the same sort of scenario there. You do have the potential to retest these highs around 16, let's call it 1697 to 1700, right in around that area, these highs here. You do have that potential. You have a minor triangle pattern here. You did hold the 50% retracement from this low to this high. You did this sort of scenario here. You came into the 50%, and now you're bouncing. So the question is, will we fail to make a higher high, and will we in fact make a lower high and fail? So this is the one scenario. The other scenario is, the retest, and then the other scenario, of course, is just to break through. But having said that, you've got momentum overdone, in the short term. You've got MACD testing the zero line resistance. So I'm not looking for a heck of a lot of upside, but you do have a zone here, the same as you do in the Dow, between 1678 to, let's call it 1700. It's about a 30-point zone, and then I think you need to be really cautious if you're long on the upside, and then looking to see if we're going to hold. It's not a very clean trend line. This trend line here, if you're going to hold this trend line or if you're going to break that trend line back to the downside. I hope that makes sense. So there's not, I think if you're catching on to the theme here, there's not a heck of a lot of upside potential in this market. So if you're long, you have to be really, in my opinion, really careful. And the upside potential looks limited. I'm not really on board for the downside either, but we really just need to see how this market's going to develop, and we need to manage risk at this point in time because we're at the upper end of this range. So, until and if we get a real breakout of the highs, I think that we might have the potential for head and shoulders top here in the short term, or we might just go sideways. So it's I think the indecision here, but looking at the scenarios is really I think is really indicative of the fact that there's really not a lot to do here. So I don't really have a lot of directional conviction. I'm more bullish than bearish, but I'll repeat it again. The upside is limited. So let's look at the NASDAQ. The NASDAQ, on the other hand, I'm not sure if the NASDAQ is leading this market to a false breakout or if it's actually signaling that we're going to go higher. So if you look at the NASDAQ at this point in time, let me just delete these fibs and let me take a look here. So if you look at, we broke out of these highs, these all-time highs, and we're holding above those all-time highs. But if you look at the, where we are from a momentum standpoint, we're really overdone short-term to the high side. So I don't see any major divergences here. You have a minor divergence here in momentum. You have a divergence here in momentum. Now that that could take a while to play out, but what I don't really know at this point in time, I don't have a strong opinion on, is is this going to hold, and are we going to push off to brand new highs, or is this sort of the false fake and then it's going to break and pull down to support? So is the NASDAQ leading the market higher, or is the NASDAQ sort of just sitting strong here while the indexes, the other indices, just retest some of their levels and put in a head and shoulders top? I don't know at this point in time, but I think we really need to watch the NASDAQ from a leading indicator standpoint to see, are we going to break above these highs, or are we going to fail and break below these lows? If we go into Monday and we were to break below these lows on a decisive basis, then I would say, this was probably just a false breakout in the NASDAQ. So let's take a look at the transports. Let's take a look at the, incorrect symbol, cash sign TRAN. So looking at the transports, to me, you've got, this is sort of interesting here. You've got this really erroneous, I don't think it's erroneous, but you've got this really crazy high volume bar right into this level. To me, this looks like a blow off. And to me, this looks indicative of a potential high in the transports, where, this is starting to really look like a head and shoulders sort of pattern, although we didn't, come down and test the lower end of this. It's kind of like a high, a high right shoulder. But if you look at this, to me, this looks like, usually when you see high volume like that come in, it's either, people supporting the market and going to push it higher into a breakout, or it's a blow off top. So to me, this looks a little bit like a blow off top. The only thing that would really confirm that is if we break, a major trend line and we just keep pushing lower. If we hold the top of this trend line and we push back up to the high side, then it'll look more like, people were supporting this market. So it's really unclear at this point in time with the transports as well. But having said that, momentum looks overdone to me. We have the potential of a blow off. And we'll just really need to let the price action guide us, and we'll need to see if we're going to stay. I'm just going to adjust this level. If we're going to stay below that high that was put in there, or if we're going to push up above that. If we push up above that, then I'd be looking at a potential test, a retest of the highs. But at this point in time, I'm not really looking for much beyond that until the market sort of resets itself, and then we'll look to see if we're going to break out at some point going down the road, and if that's going to be a clean breakout or not. So I hope that makes sense. Not a lot of upside in this market. Let's take a look at, let's jump right into some of the currencies. Let's look at the dollar index. So the dollar index continues the breakdance fight. It's just in the middle of this range. I don't really have a lot on it, except to say, we're oscillating back to the downside, and it looks like we're probably going to bottom out here unless something major, some sort of major world event happens that causes the dollar to break support. But I think the dollar index is just in its oscillation back to the downside, and it's probably going to do, this sort of thing where it's going to come down and test this or test this, and then just oscillate back up to the high side, barring any major world event that is going to, that we can't really foresee, and that is going to rock the dollar index. Let's take a look at the euro. So the euro here, same sort of situation. It's still in that range. It's holding the 50% retracement at this point in time from the low to the high. I really don't have much on it. Momentum is getting close to topping out, and question is, are we going to break through that trend line and retest the highs? Are we going to fail this trend line and push back down, test the 618, come back into $1.30? $1.30 seems to be the central sort of pivot here, and the central magnet, major support kind of zone for this this currency at this point in time. We've just been trading above and below it. Let's take a look at the USDCAD. So the USDCAD, I've been expecting higher prices, and we didn't get through 105.5, and we pushed all the way back down to, let me just delete some of these. No, actually, I'll keep those on. We pushed all the way down to like 103-ish, and we're just bouncing off that level. Is that level going to hold? Well, you've got the potential makings of a momentum shift here, and this looks like, if this could roll back above 20, looks like this area is going to hold, and we might get a push back up to retest some of those higher levels, possibly even into 108, but I think that's kind of a long shot at this point in time. And we have a minor downtrend line going here. So it'll be interesting to see if we get a momentum shift back up to the high side and we break that trend line. Then I'd be looking for a retest of those highs. Let's take a look at the gold market. The gold market had took a bit of a whooping last week, where we had this trend line. We had, it looked like we have a seasonal tendency in gold. It looks like we're going higher. We pulled back to a nice, buyable area, and then we just sort of crashed through it. But having said that, I'm more bullish than bearish than I am. I'm more bullish than bearish than I am on gold. That doesn't make sense. I'm more bullish on gold than I am bearish, for the simple reason that, we're holding this swing point. We're holding this swing point low, and, momentum is starting to bottom. So I'm looking at an area here where gold might actually get interesting, maybe all the way back into 1282, which has been a pretty major support level. Going back, it's a pretty key level. So if we come into 1282 and we hold, or we hold above 1282 and then we shift back up to the high side, it'll be interesting to see if we're going to, push back up and resume the uptrend. This has been a pretty, I think a lot of people got on this move. Like if you notice this move here, this pullback and this pullback were about the same right to support. I think a lot of people got on that move and then it flushed out. So it'll be interesting to see if we're going to hold above this zone and then push back up to the high side. And that was just sort of a fake out sort of move. Let's look at the silver. Silver looks sort of the same. I think you've got support around $22 here where you're at, but below that you've got about 22, somewhere in this breakout area where we broke out. So these markets are pretty crazy, right? They give back. They give back a lot of what they've given, in a short period of time. And if you look at the technicals, from this high here where we kicked off this down move to this low, we came right into a 50% retracement, and that's where we sold off from. So it'll be interesting to see where we're at in this minor move. Where are my fibs? Where are my fibs at? Low, high, and we're just holding the 618. So it'll be interesting to see if we're going to hold this zone and push back up to the high side, or if we're going to flush down into this, breakout level. So I'm still more bullish than I am bearish on silver. But having said that, you've got on both the metals rather, you've got a weak, you had the makings of an early stage reversal, and then you had some strength, and now you're back to weakness. So, momentum is starting to bottom out to the downside. I'm just looking to see, is it going to hold this level? Is it going to hold that level? Are we going to bottom out and then push off, back up to the high side? Or is it going to come all the way back and retest the lows? It's really hard to tell at this point in time. I wouldn't be interested in being a buyer until we started, wrapping back up to the high side. So I hope that makes sense. Be careful if you're going to be trading the metals, because you don't really know how far they might pull back. Let's see, copper. Copper's the same sort of scenario. It's just really testing, some of these levels where it broke out of this this downtrend line. It's right back in testing that level. Okay, right where it broke out on higher volume here. You would expect that to be at least an intermediate support level. So usually when you see a high volume area where a breakout is, and you come back and retest that, that's a pretty good indication. You want to see if it's going to hold that level or not. Let's take a look at crude oil. So crude oil, I don't even want to give my opinion on anymore. I keep thinking crude oil is going higher, but it's just really, it's really fits and starts, sloppy and choppy back and forth. I'm more bullish than bearish on it, but it's just a really messy market. It's starting to coil into a triangle pattern here. I like it higher, but who knows when it's going to do that, or if it's going to do that. Let's look at natural gas. So natural gas has been pretty sloppy as well, and it's really been, just banging back and forth between these key levels of 352, 370. We had 325 on the downside, but recently, what has it done for us lately? Well, lately it's just been between 352 and 370. So I think those are the key levels in play at this point in time. If we get through 370, then I think you can look at, test of potentially 378, 392. I'm more bullish than I am bearish on natural gas at this point in time. I think we put in, a pretty complex bottom here. So I think we're going to hold like 325. How high we're going to go, I don't know. We could come all the way back down and test it. I think you have to be careful. But having said that, I wouldn't be surprised to see a test of 378, 392, or even $4. So it just depends on, are we going to hold these levels and break? But at this point in time, we're just ping-ponging back and forth between those levels. Let's, are there any major markets that we've missed? I want to look at the bonds. And I know this looks pretty sloppy, but the bonds are a little bit confusing at this point in time. It looks like we're holding this double bottom low at this point in time, and we just keep, coming back off of there. But we're sort of in this sloppy down channel, right? But we haven't broken through that low. And if you look at the 10-year, so here's the 10-year, same sort of scenario. I don't know if we're going to put in a bottom here, or, I believe interest rates are going higher, but looking at the technicals, we don't really have a clear signal. We are more bearish than we are bullish on the on the bonds. But, until we break this trend line, at least, if we break through this trend line, then that, we could get a potential reversal. And I'm not sure why my trend lines like to move on me, but it's more like this. Okay, so if we get a break of this trend line back up to the high side, then that would put me more on the bullish side. But let's take a look at the the inverse of that. And if you look at interest rate futures, to me, look like they're in a clear uptrend. So if you look at, here's the interest rate futures. We broke up above resistance around 2745. So about almost 2.5%. And now we're approaching 3%, which is, right up here. But if you look at this uptrend, until it breaks that uptrend, I'm going to be more bullish on interest rates going higher, and I'm going to be more bearish on bonds. So I think I think this is a cleaner chart than the bonds, but we just really need to watch those relationships. If we break this trend line in a decisive way and break below well, on my chart it's 27.45, but that represents 2.745%. If we break below that on a decisive basis, then I would say interest rates aren't going higher. But I think they're just sort of inching their way higher, and I think that even though the bond chart isn't that clear, I think it's a little bit easier to look at this chart and get a clear picture that interest rates are on a steady sort of fitty starty move higher. It's not a clean move. It's just, back and forth, but the trend is clearly, to the high side on interest rates. So I hope that makes sense. There's an event coming up. I think we're done looking at the markets. I don't really see anything else interesting to really look at, although I could take a quick look at Google. So we were looking at Google from the perspective of doing a short trade that didn't, I was giving the reasons why I wasn't really clear if the short trade was going to make sense. And you can see this was going back 2 weeks ago, and you can see that the analysis to be cautious sort of made sense because we found support right in that area where we were looking for potential support, and we pushed right back off back to the high side. So that would have been a painful short to stay in if, for people that were interested. I did that as an analysis, just, hearing some people looking at the short side of Google, and I was playing devil's advocate and talking about the support areas and why it might, be a little bit risky. So let's take a look at Apple. Apple's interesting here because we broke out of this 471 area, and then we failed. I guess Icon popped it here. And it came right back down, and look at where it closed right below. It closed right below that breakout point. So at this point in time, I think you need to give this a few days to settle out. I think what'll be interesting is if we hold these lows after let's say 3 to 6 days, and then we come back and we break 471 again. It'll be interesting to see if we're going to close this window and close that gap. Just for a technical move back up to the high side. I personally would give it a few days and see if it's going to, if that's going to materialize. Let momentum bottom out, and let's see if we can break back up above there. And if not, that's fine. Then no trigger, no trade kind of thing. So this isn't the best trade in the world, but it's just sort of an interesting potential trade just because it's all news driven, and once the news is kind of flushed out, then there's no reason to really push it lower. It'll be interesting to see if we can get half a gap filled back up to the high side, and even maybe a full gap filled back up to 490. It's about a $20 move. So on a percentage basis, it's not huge. Okay, so let's wrap up this video. I'm just going to let me just pull up a website here. So I'm going to pull up the CSTA's website. For those of you that know me, I'm the Oakville chapter head. I run the Oakville meetings. We had a great meeting last Wednesday that just passed. We had just over 20 people at the meeting. It was our season kickoff. But we have the organization, the CSTA, along with the Market Technicians Association, is putting on a Fusion Analysis Conference. It's going to be a really interesting conference. So I think it's only $50 to register for the day conference. It's going to be at the Weston Harbor Castle in Toronto, and it's going to be a really interesting meeting. If you click over here on Fusion Analysis, a joint presentation, or from the main page, all the details are here. You can click register if you're not a member. You might want to consider becoming a member. I think non-members are $75, members are $50. Of course, there's obvious benefits to being a member on a yearly basis. I think it's only $125 for the year. You can attend all the different chapter meetings, in your city, or, if you're traveling throughout Canada, there are chapters in every major city. So this is something that I would strongly suggest you look at attending. I think it's going to be a great conference. It'll be a good opportunity to network with the Toronto community and to learn some new concepts and some of the evolution of technical analysis and fusion analysis, which is really, from my understanding, the bringing together of different disciplines like fundamental analysis and quantitative, which is becoming a lot more prevalent in the industry. There's a lot of quantitative analysis being done in decisions with real money being made based on quantitative analysis. So I hope that helps. Try to attend this event. Take the day off work if you can, and we'll look forward to seeing you there on the 26th of September, Thursday the 26th. And we'll look forward to seeing you at an upcoming meeting or at the next video update. All the best, good trading, good investing. Bye for now.